Was really good. Was really good. We back at it again. You already know. So obviously by the thumbnail, and if you follow me on Instagram, if not, do so because I post all my trades live and etc. So there's no BS, no nothing. But we just finished with a 100% win rate this week, 98.5% profit gained, which is just my overall account balance. Beautiful week. All glory to God. But yeah, so in today's video, I'm just going to be going over the strategy and the concepts and techniques that I was using to receive that 100% win rate this week and win every single trade and get the money that I got in return and et cetera, so then y'all can do the same. So let's hop straight into it. All right, so we're going to work on Monday's trade first, and then we're going to do Fridays. So Monday was the 17th. We had a big bullish candle to finish that day. All right, so then we're going to move to that 4-hour time frame. Now from here, this is where we're going to just mark up our 4-hour highs and our 4-hour lows. I ended up actually fully charting on the 5 minutes, not even using the hourlies, and it worked out just like I've told my students, just like I mentioned in my supply and demand video. Works perfectly fine, especially if you can't find anything that actually fits in place on those hourly time frames. So we won't be charting on the hourlies, we'll be doing it on the 5 minute, just to show you that again it still works. And I will be putting up my trades within transitioning throughout the video. That's if you haven't seen them on my Instagram. 4-hour high and the 4-hour low, just like a daily high and a daily low. There are areas that there are going to be tons of liquidity, tons of stop losses, and are ultimately what the market's going to seek out to either form a market structure shift and change the overall trend, or just simply sweep a ton of liquidity and continue in the what you would think direction. So if this were to stick up, this could either break there from a market structure shift and keep going up, which would be a continuation, or it could just sweep liquidity and just stick down. And then the 1 hour, again, we're talking about just mainly this area, which would be Monday. Obviously, we are still buying in every single time frame. And then we'll just jump straight to that 5 minute. This is where we're going to be charting. So obviously right here is going to be our 4-hour high. And down here is the original 4-hour low within starting the day. And then this ended up being the new 4-hour low. All right. And then just a few extra things. Okay, so we got a supply zone up here. All right, just like I said in the supply demand video, where that big impulsive candle is, you chart up the previous candle, whether that's from the top of the wick to the bottom of the wick or top of the candle to the bottom of the candle. All right, and this fair value gap that ultimately eventually got inversed. So now that we got everything charted out, now let's go more into detail. All right, so this 4-hour high up here, like I said, there's going to be tons of liquidity. And right here, you can also see that it formed a double top, which means there's going to be even more stop losses up there, which made that a more prominent area that price is going to seek. Because it's just like I've mentioned in all my videos and any other trader that you might watch, and if they don't say it, then they're probably not legit. Market seeks liquidity and it seeks balance. The more you acknowledge that and see that time through time whenever you're taking your trades and just looking at the market overall, the more that you realize that's the truth, because that's ultimately what it seeks, because the market wants money. It seeks out the money. Guess where the money is going to be? Where there needs to be balance or where there's liquidity, because that's where they're going to get their money. All right. So price came down and swept this 4-hour low. This right here wasn't even a news candle. So this was clearly manipulation, especially with this big bearish candle right there. All right. And guess what it did in the process? It swept that 4-hour low. Like I said, tons of liquidity, which ended up fueling this big buy side move. All right. Which ended up inversing this candle, which caused me to enter, right? I entered around here, actually. Yeah. Which then I entered once it closed above the inverse fair value gap, because with an inverse fair value gap, it needs to be disrespected. Just because the candle breaks through like that doesn't mean it's fully disrespected until it actually closes above. So if price were to break through it like that and then come straight back down and just leave a wick, the body doesn't close above the fair value gap, that is not disrespected. But if price does close above that fair value gap, then it is disrespected and more prominent to go in the opposite direction. Just a little brief description on that inverse fair value gap, because I've been trading that a lot more recently. All right, so then I entered once it closed above, which would have been that doji candle right there. Obviously, stop loss was originally right there. All right, and then my TP was set slightly above where that 4-hour high is. All right, and I'll show this trade in just a second. And I placed it right where that high was. All right, and guess what price did? Seeked it out. Came back for a few more retests, so I moved my stop loss up more because obviously you don't want to lose money, and you'd rather lose less money than more money. So you got to move your stop loss when it creates new lows and etc. And price ultimately pushed up, swept that 4-hour high, and boom, we got tagged out for like a 25% gain right there. All right, and then afterwards, guess what price did? It continued upwards like a mug. It just kept shooting, which is what I was just saying with those. And what I'm going to add on to is with those 4-hour highs and lows, just like standard liquidity, essentially, there's two things it can do. It can either stick it and completely, it can either, just like down here, hit it and completely reverse, or it can hit it and completely just keep spiking upwards. Now, another thing we're going to go into is accumulation, manipulation, and distribution. All right. Which is, again, overall the market once you see it, because like I mentioned to a few of my students, the market overall, how it moves is just straight manipulation. You know, consolidation, you can look at it and be like, oh, it just keeps going, keeps breaking the new highs and then coming down and breaking the new lows. That's just liquidity sweep after liquidity sweep after liquidity sweep. It's just a whole cycle of manipulation. So right here, it had this buildup where I was just consolidating, and then price jolts down. So anyone who entered there or after these big breakdowns, they're thinking price is going to continue downwards because look at that big sell side push. Or maybe when it comes to a reject off of that original fair value gap. But guess what? There's a 4-hour low. Now you're done for. And probably more liquidity to the left side I got swept. And guess what? It accumulated with this consolidation. It manipulated by pushing price down to stop everyone out. And then the distribution is this continuation to the upside. I said 4-hour high right there. I know I spelled it wrong, but I ain't tripping. 4-hour low right there. Got our supply zone right there. And then we got our demand zone right there. All right, then. All right, and then on top of that, we had a fair value gap right there, which did create balance once price came back and tapped into it, gave a strong rejection, kept going down. But guess what? Demand zone, right? Which ultimately caused price to continue upwards and break that. And the moment it broke that, just like the last trade, just like just about every trade that I took this week, boom, I was in that. All right, stop loss was put below that candle because we did get an immediate retest reject and then a couple more over there, which then eventually I did move my stop loss to about there. And I took my TP just at this liquidity level, not the 4-hour high. And I took it right there. And this gave me a 42.5% gain. All right. So with this trade, you might be like, oh, I thought we were taking to the 4-hour highs and the lows. In this scenario, just like I mentioned in the demand zone, price is ultimately going to seek out the liquidity within those POIs. There was already tons of sell side pressure the moment price came up and tapped into that supply zone, as you can see by that slight reversal right there, that slight little pullback. And it struggled to hit that TP a whole bunch because of all the sellers within this area, which is why I didn't hold to that 4-hour high. Because not only do I have to make sure that the supply zone doesn't do anything, but there's liquidity there and there that was never swept. Because of the not super smart traders who entered into sell positions immediately off that rejection, didn't wait for liquidity to be swept, and expect the price to go down and hit the TP. And then guess what? I saw that inverse. I entered and I capitalized off of that little small move and got a ton of money from it, while they got out with no money or a loss of money because they didn't wait for that liquidity to be swept. Like I've said, like I continue to say, the market seeks liquidity and it seeks balance. Screw the inverse fair value gap. Screw the supply and demand zone. All right. If you know what the overall market's direction is in, all right, and you can see, okay, price swap liquidity there. We're getting a ton of buy side pressure. And guess what we have here? Liquidity here and here that was never swept. Or liquidity here that should have swept liquidity there, which built even more liquidity. Then you can look at that, especially with the big bullish moves, and you can enter for that trade. You could have entered immediately off this liquidity sweep right here because of the people who entered the buy positions right there. And boom, you could have caught that whole thing. And you didn't even need a supply to demand zone. You don't need none of that. Just simply knowing and understanding that the market seeks two things, which is liquidity and balance, completely dismays any indicator, any rectangle, shape, whatever. I could delete my entire tool chart up here, not do a single thing, and I guarantee as long as I'm able to see where there is obviously liquidity, so I'll keep my lines. And if I'm able to just chart out the liquidity areas, so I know what's being swept right now and what's going to be swept, especially those 4-hour highs and lows, because price tends to seek that 24/7, because that's either going to create a market structure shift or tons of liquidity to fuel a reversed move. But the moment you understand that, the moment that just broadens your view and opens up everything, you're able to see more, you're able to understand more, take trades more, and hold on to this. The moment price tapped into that supply zone and started giving that little pullback, I felt like closing it. I thought I was going to get screwed over. But I knew, as a strong emotional disciplined person, I knew that price was going to seek that liquidity. Regardless of that supply zone, regardless of how many sellers are in there, I knew price was going to seek that liquidity. So I'm going to be disciplined, emotionally strong, suppress those emotions. And understanding that will help you mentally when it comes to not exiting your trade super early. If you don't understand liquidity, if you don't understand that the market seeks liquidity and balance, if you're put in this scenario, you would have exited. The moment it tapped into that supply zone, you would have left it and would have got out with basically nothing or maybe even a loss. As those big banks and institutions are the big sharks and we're the little fish. Just because the little fish are in the way, just like all those sellers and their supply zone are in the way from the big sharks getting to what they want, which is liquidity or their meal, why would they let the little fish stop them from getting their ultimate goal? Just because there's a big supply zone, just because there's 5 supply zones in the way until it gets to that liquidity, doesn't mean price isn't going to continue to try to seek that liquidity. They don't care about all the sellers in there. Okay, all them sellers don't amount to all the money that they have to purposely push that price up. You know, that's what happened when I got tagged out right here by that slight wick. You can see right there. That was a manipulation candle because they had to put so much money in the market because there were so many sellers making them think that, oh, it's going to sell, causing people to exit the trade early or take a loss, just to purposely push that price up and immediately shut price down, sweep that liquidity down here, and then push all the way back up. Like I said, the market is just simply tons of manipulation, and it seeks two things, liquidity and balance. But yeah, that's just everything. Hope you learned some in this video. If you want more in detail, I still got that free 1.5 hour one-on-one mentorship session. That'll be in the bio and in the description. Take advantage and use that so you can build that trust with me. But yeah, you can like, subscribe, go to the gram, whatever you want to do. I'll see y'all.